Good day. Today we are going to do um, the March 2023 paper, the Bombos. We are going to be focusing on the fixed asset, where we'll be doing the fixed asset and also the asset disposal. So let's get into it. They said, choose the concept in column B that best suits the description in column A. Write only the letter next to the number on the answer sheet. The first one, 3.1.1. A fixed amount of depreciation is written off every year on the fixed asset. So which one is that? So if we can look here, D, depreciation on cost. So the depreciation on cost here is also called the fixed installment method, or the straight line method. So this depreciation, it does not change. It is always the same. So the answer for 3.1.1, it is D. And then, a separate record is kept of every asset in the business. Which one is that? That is the fixed asset register, because in the fixed asset register, we record assets individually on the fixed asset register, meaning that every fixed asset has its own fixed asset register. So the answer is E. 3.1.3. In the note for the fixed asset, the original cost price is shown, right? The original cost price is shown. Which one is that? There is the historic cost, because it states that fixed assets should be recorded at their original cost price. So it means that 3.1.3 is A. 3.1.4, the disposed asset will be indicated at this value in the accounting record. So the disposed asset, so it must be indicated at the carrying value. So meaning that the answer for 3.1.4 it is F. And then the next one, 3.1.5. The value of the asset lost during the financial year. The value of the asset lost during the financial year. Which one is that? The value of the asset lost during the financial year. The value of the asset lost during the financial year, that is going to be the depreciation. So the answer is C. When an asset is no use of a business. When the asset is no use for the business, which one is that? That is the asset disposal. Because when the asset is no longer used for a business, then we have to dispose it. So the answer is G. When the accumulated depreciation is deducted from the cost price of an asset before calculating the depreciation for the financial year. So that is going to be the depreciation on the diminishing balance method. That is B. Now, we're here. 3.1.2. Now, what did they say in 3.1.2? 3.2. The following information relates to Limpopo stores. Their financial year ends on 28 February 2023. So the year ends here. So meaning that this year starts on 1 March 2022. Then it ends on 28 February 2023. They are saying, use information A to complete the following accounts in the general ledger of Limpopo stores for the period of 1 March 2022 to 28 February 2023. So they want us to complete these accounts. Vehicles, accumulated depreciation on vehicles, and the asset disposal. So they said we must use information A. So let's go to information A. Let's go to information A. Information A. Here is information A. This is the information A. The following information was obtained at the end of the previous financial year. Right? The end of the previous financial year. Then they gave us the vehicles. The vehicles at the end of the previous financial year on 28 February 2022, because the current year ends on 28 February 2023. So the previous year ends on 28 February 2022. So this is the balance. These are the balances of the previous year. So if these are the balances at the end of the previous year, it means that they are going to be the opening balance at the beginning of the financial year, which is 1 March 2022. These are going to be the opening balance. So the opening balance for the vehicles is 890,000. So it's already recorded. And then the one for the accumulated. So the accumulated depreciation is a negative asset. So it increases on the credit and decreases on the debit side. So therefore, we're going to write the opening balance on the credit side. So it's 1 March 2022. It's a balance brought down. How much is it? 350,000. Right? And then for the vehicles, they also gave us the balance at the end, that it is 640,000. The balance at the end of the vehicles, or at the end of the year. So they gave us the closing balance, 640,000. So the closing balance of the vehicles, it is going to be here on the credit side. So on February 2023. So the closing balance, we call it the balance carried down. So it is 640,000. So the closing balance, it must be transferred to the opposite side at the beginning of the following month. So this is going to be 1 March 2023. So it means that when we open for the next financial year, the opening balance for the vehicles, it is going to be the 640,000. Then they did not give us the closing balance for the accumulated. Let's continue. They said, depreciation on vehicles is calculated at 15% per annum on the straight line method. So we are using the cost price method. And then they said, on 30 October 2022, an old vehicle was sold for 310,000. So let's draw a timeline, because I believe that a timeline, it is going to make things to be very easy. So let's draw a timeline. So here is a timeline. Here is a timeline. The year starts on 1 March 2022, then ends on 28 February 2023. So it's March, it's April, May, June, July, August, September, October, November, December, January, February. Right? So in here, they said, on 30 October, so October is here, 30 October 2022, an old vehicle was sold for 310,000. Right? So the cost price of the vehicle was 420,000. Now, when we are doing the asset disposal, When we are doing the asset disposal, the cost price of the asset that is being sold, we must record it on the debit side of the asset disposal. So we come here to the asset disposal. So this is on 30 October 2022. So as the vehicles, the cost price of the asset being sold, it must be on a debit side. So it is 420,000. Then on the credit side, on the credit side of the asset disposal, we must record the accumulated depreciation of the asset that is being sold. Okay? So let's go into it. Okay, and then also on the credit side, we must write that how was the asset being disposed? How did we dispose the asset of? Okay, we must also write that. Before we continue, since we are disposing a vehicle, or since we are selling the vehicle, it means that the vehicles, they are decreasing. As we know that the double-end system is saying that if something is debited, it must also be credited somewhere else. So we have to go and credit this amount in the vehicles to show that the vehicles of the business, they are decreasing because we are selling the vehicle. So we're going to come here. It's an asset disposal. So this is happening on 30 October 2022. So the cost price, it is 420,000. Right? Then, also, because we are disposing of an asset, we are disposing an asset. So the asset is leaving the business. So when the asset is leaving the business, everything that is containing the asset, it must leave the business, even the accumulated. So it means that we must go to the accumulated depreciation and decrease it as this accumulated depreciation of the asset being sold is living with this asset. So that is why we record it on the credit side. That is why we record the accumulated depreciation of the asset being disposed on the credit side, so that it can be able to go to the debit side of the accumulated depreciation to show that the accumulated depreciation is decreasing with the asset disposal. So this is happening on 30 October 2022. So then we have to write down accumulated depreciation of the asset being sold. Remember, I said that on the credit side of the asset disposal, you must also write that how was this asset being disposed. So this asset, it was sold for cash. So if it was sold for cash, it means that we were receiving the money. So it's going to be the CRJ, and then it's going to be the bank, because the bank is increasing. So the bank will be increasing on the debit side. As we know that if something is credited, it must also be debited somewhere else. So it means that we are going to go and debit this amount in the bank to show that the bank of the business is increasing. Then they are saying the accumulated depreciation on 28 February 2022 on this vehicle, it was 35,500. So meaning that in this accumulated depreciation, they've included even the depreciation of this year. Because usually they can give you the accumulated of the asset being sold, the balance at the beginning of the year, meaning that you still have to calculate the depreciation of the asset being sold, and then you add it together with the accumulated depreciation at the beginning for the asset being sold. then we go and record it in the asset disposal. So in this case, so like they did that. They gave us the accumulated depreciation on 28 February 2022. This is a balance at the beginning of the year, because it's a closing balance for the previous year, meaning that when we start this year on 1 March 2022, this 35,000, it is going to be the opening balance. So we come here, we have 35,500. Now we must also calculate the depreciation for the current year for the asset being disposed. Remember, they said that the VHs, we're using a straight line method, so meaning that we don't subtract the accumulated. So we are going to come here and count that this asset that is being sold, it stayed for how many months in the business in the current year. So it was sold on 30 October, meaning that it stayed from 1 March to 30 October. How many months? To October, it's March, April, May, June, July, August, September, October. That is 8 months. So it means that we are going to say 420,000 multiplied by 15%, multiplied by 8 over 12. That is how much? Let's calculate. So 420 divided by 15%, multiplied by 8 divided by 12. That is going to be 42,000. Right? So we come with it, come and edit here. Right? We must also come here to the accumulated, because when we are calculating a depreciation, the depreciation has to increase the accumulated depreciation. So we have to come here and write 30 October, right, 2022. So with depreciation for the asset being disposed, so it is 42,000, right? So let's add these two. 42,000 plus 35,500. That is going to be 77,500. So we must go and decrease the accumulated with this amount, with the 77,500. We are decreasing this amount. In this amount, 42,000 is included. So that is why we're debiting the whole amount. And then also the opening balance of the asset being disposed. The opening balance of the accumulated depreciation for the asset being disposed. It is included in this 350,000. So, and then they said on 1 February 2023, Limpopo stores purchase a new vehicle on credit. Right? So we purchase a new vehicle. Okay? So before we go there, let's come and calculate the depreciation for the asset that stayed for the whole 12 months. Now let's come here. At the beginning of the year, the vehicles, they were 890,000. And then on 30 October 2022, they decreased by 420,000. So I want to know that actually which vehicle stayed for the whole 12 months. So I'm going to say 890 minus 420, because the 420 did not stay for the whole 12 months. So it means that the amount they stayed for the whole 12 months, it is 470,000. So we're going to say multiply by 15%, multiply by 12 over 12 because we're using a cost price method. So it's going to be 470,000 multiplied by 15%. That is going to be 70,500. Right? So it means that we must go to the accumulated depreciation and increase it with this amount. Right? So we must go and increase it with the 70,500. So it's a depreciation. This is on 28 February 2023. Then now, remember they said that we bought a vehicle on credit. So if we are buying a vehicle on credit, they said we bought a vehicle on credit on the 1st of February 2023. So if we are buying a vehicle on credit, that is going to be the creditor's control, CJ. But they did not tell us that we bought it for how much. They just said calculate the cost price. So let's come and calculate the cost price. So we are already given the closing balance. So it's easy now to find the cost price for the new vehicle. We just have to calculate the credit side because we can see that it is a bigger side. 640,000 plus 420. That is going to be 1,060,000. 1,060,000. So now we have to find the difference so that you can find the amount here. So minus 890,000. That is going to be 170,000. Just said 1,060,000 minus 890. That is going to be 170,000. So it means that an additional vehicle is 170,000. Then we come to the accumulated. Now we have to balance it. So you can see that the credit side, that is the bigger side, right? But before we do that, remember, there is a vehicle that stayed for 1 month. This one. The one that was bought on 1 February 2023. And remember, we now know its cost price. It is 170,000. So we're going to take 170 multiplied by 15% multiplied by 1 over 12 because it stayed for only 1 month. So 170 multiplied by 15% times 1 over 12. That is going to be 2,125. So we'll go with it. 2,125. Now we check. How much is the credit side? So it's 350,000 plus 42 plus 7,500 plus 2,125. That is going to be 464,625. So we get both sides, the bigger side. Now we have to find the difference. So minus 77,500. That is going to be 387,125. So this is the closing balance, the balance carried down at the end of the year on 28 February 2023. So the closing balance, it must be transferred to the opposite side at the beginning of the following month. So the following month after February, it is 1 March 2023. It's the balance brought down of 387,125. Then now to the asset disposal. So when it comes to the asset disposal, when we are doing the asset disposal, if the debit side is bigger than the credit side, so it means that we have made a loss. So in this way, you can see that the debit side, it is bigger than the credit side. So it means we made a loss. Then if the credit side is bigger than the debit side, so it means that we made a profit. So in this case, we made a loss. Let's find the difference. 420,000 minus 310 minus 77,500. That is going to be 32,500. So this is a loss on sale of the fixed asset. So which is going to your income statement under operating expenses. It's an expense. Now we move on to 3.2.2. So 3.2.2, what did they say? Let's go back to it. Use the information B regarding equipment. Complete the fixed asset note for the equipment. So let's go into it. Information B. You are provided with the information for the equipment relating to Limbombo stores. Complete the fixed asset note by considering the following information. Equipment was sold at the carrying value on the last day of the financial year. Right? The total depreciation on the sold equipment was 85,000. No equipment was purchased during the year. Calculate the missing figures. Okay, let's go back to the answer sheet and see what they've given us. So they are saying they want the carrying value. So let's do the calculations. So they gave us the space for the calculations. So the carrying value just have to say cost price minus accumulated. So the cost price is 382,800 minus 146,800. That is going to be 382,800 minus 146,800. That is going to be 236,000 like this. So now we have this one, 236,000. Then we don't have the addition. And then they gave us the cost price and the accumulated depreciation at the end. So it means that you can find the carrying value at the end. You can find the carrying value at the end by saying 172 minus 83,000 172 800 minus 83,000. So it's 172 800 minus 83,000. That is going to be 89,800. Now let's come back here. So now let's come to the disposal at carrying value and the depreciation, because they did not give us. So let's come back to the information. What did they say? Equipment was sold at the carrying value on the last day of the financial year. Right? Then they are saying total depreciation on the sold equipment, it is 85,000. So we are going to come here. Total depreciation for the asset being sold, 85,000. total depreciation for the asset being sold, it is 85,000. Let's put it here. So if you can check here, the cost price, it's 172,000. But at the beginning of the year, it was 382,800. Remember, we don't have the addition. So no equipment was bought during the year. They only sold. So now we just have to find out the cost price decreased by how much. We have to find out the cost price decreased by how much. So we're going to say 382,000. 382,800 minus 172,800. That is going to be 172,800. That is going to be 210,000. So meaning that this is the cost price of the asset being disposed. Right? Remember, we are looking for P, and we are looking for a disposal at carrying value. So to find a disposal at carrying value, we have to say cost price minus the accumulated depreciation of the asset being disposed. So the total depreciation for the asset that is being disposed, it is 85,000, which is the accumulated. So that is going to be 210,000 minus 85,000. That is going to be 125,000. Right? Then now we are looking for letter C, which is the depreciation. So now we are looking for the depreciation, letter C. Now how can we find the depreciation? Now for this one, we have the accumulated depreciation at the beginning, and then we have the this one and this one. So now to do this, we must first know that how do we find the accumulated depreciation at the end of the year? How do we find it? Because that is the first thing that you must know, that how do we find the accumulated depreciation at the end? So to find the accumulated depreciation at the end, we must say accumulated depreciation at the beginning, which is 146,800. 146,800. Then you say plus. We say plus the depreciation. So the depreciation is not given, it is C. So we're going to say plus C. Then you say minus the total depreciation, or you say minus the accumulated depreciation of the asset that is being disposed. So the depreciation for the asset that is being disposed, it is 85,000. So minus 85,000. Then we then get the accumulated depreciation at the end. So it was given, it was 83,000. So now we just have to solve for C. You say C is equal to, so it is going to be 83,000 minus 146,800 minus 85,000. 146,800 minus 85,000. That is going to be 61,000. Then when you take the 61,000 to this side, it is going to be the negative 61,800. Then C is equal to, so 83,000 minus 61,800. That is going to be 21,200. So we found our answer. That is it.